Hi, I'm Steve Spencer. I'm a partner at SMB Capital, a proprietary trading desk in New York City where we trade stocks, futures, and options. One of the best momentum trades in the market is a trade that is unexpected, where most people are thinking the exact opposite is likely to happen. We had one of those such trades in Tesla. As anybody who follows Tesla closely knows, the stock has been hammered for the last few months. Starting in October, there has been a downtrend. It started with the third quarter delivery numbers where it gapped down from around 280 to 260. And since then has been in a very strong downtrend that recently had accelerated to the point when it got below $180, it very quickly was below 150 and more recently almost got to $100 a share. You can see in this long-term chart that you're looking at right now, that downtrend from October to November really started to accelerate in the last month or so. And you can see the volume started to increase. When a trend accelerates and gets very steep and the volume starts to accelerate as well, this is quite often when you put in a bottom. There's a lot of fear. People are panicking. The stock is already down 60, 70% from the high in a very short period of time. People who are buying it on the dip at 250, at 200, at 180, they're just getting hammered. And there's just so much pain. And what we had recently was we had the delivery numbers that came out on January 2nd, and the stock, gapped down again. And so we had all this negative news. And then, so what happened overnight? Overnight, Tesla cut their prices, the biggest price cuts they've ever done in China, 10, 15%. There was just this incredible negativity. That is a scenario where I look for a bounce, and quite often for a stock to put in a near and even medium-term bottom. Doesn't mean necessarily in 6 months from now, there can't be some negative news in the stock, and it tests the low again or puts in a new low before it has a much larger bounce. But quite often, short, medium-term bottoms are put in when the stock is trending lower due to negative things. People are confused. Maybe people don't pay attention to the company closely, aren't aware that there's negative things going on in softness in China. Delivery numbers are slowing down and larger institutions are selling the stock. And then Musk is selling the stock and it's just getting hammered. So just short-term traders or people who are casually watching it, they're not really thinking about this. They're thinking, oh my God, this is the biggest price cut ever. This stock is, 110. It's going to go to $90, $80 a share. And you could just see, if you followed on Twitter overnight and this morning, you could see just the general public being really, really negative as this news came out. Here's a tweet from somebody saying, Tesla, before the market opens, Tesla's likely to test its appointment with double digits today. And another tweet from somebody who's a trader saying, Tesla, wait, you can buy this for same Tesla cars in China for almost 50% cheaper. Yeah, you can buy them 30 to 40% cheaper in China than you can in the US. It's a very different market. Tesla's going to have different pricing strategies. Well, this person seems very frustrated that they cut prices and you could buy their cars so much cheaper in China. This is not cool that they're doing this. And it's going to most likely be sub $100 today. And I can tell you, even talking to the younger traders on my desk, after the open, we're like, hey, well, what was your thought process? Why were you looking for a bounce, Steve? I was like, because everyone's negative on it. It's just the news is like, they're cutting prices. This is bad. Their margins are going to be lowered. Like, Steve, why were you thinking the opposite? Well, when you have a stock that's in a downtrend, the downtrend accelerates. And then there starts to be headlines that are negative about price cuts. And people are like, oh my God, if you don't understand what's going on there clearly, which is in China, Tesla has grown their factory from 150,000 units from a couple of years ago to 750,000 units this year. And they've just increased production by 30% a few months ago. And they now can build over 1 million cars in China. So they have room. They need to lower prices to be able to sell those 1 million cars. Half of them will get exported to the rest of Asia, to Europe, but the other half, they need to sell them in China. And if their margins in China are 20 to 25%, they can cut prices and still sell profitably. it's bad news actually for their competitors that are not profitable. They're break even or losing money. They're going to either have to respond and lower their prices more or keep them the same, and Tesla will take share for them. So that's kind of my mindset. And if you look for a couple of other tweets, people who follow the company closely, one person was tweeting, they've cut in China, they've cut in other Australia and South Korea. And the response to this person was like, oh my God, this is going to be a bloodbath. Last time they cut, the stock got killed. His response is like, nah, it's priced in. The stock's already come off quite a bit. And this is someone who follows the stock very closely, and the company very closely, I should say. Company even more important than the stock. Someone else tweeted out before the market opened today, the fact that Tesla has lowered their prices in China is a positive for the company and its balance sheet and bullish signal for the stock. If you don't understand this logic, you don't understand the business. So the first two were people from like traders. People are just casually kind of watching what's going on and seeing the downtrend and seeing the negative headlines. And the next two were from people who follow the company much more closely, understanding they need to take share back. They need to grow. They've just increased production a lot. When you increase production, your costs come down so you can afford to lower prices. So that basically encapsulates my thesis coming in. Here are the morning game plan notes. Trading down from 110, I think yesterday gapping down to 103, 104. And as I always do, I say, okay, here are the short-term prices that we need to watch. Yeah, my thesis is look for a bounce. These large price cuts are much more damaging to their Chinese competitors. It's actually a good thing if Tesla can continue to grow their share in China and expand and continue to grow 40, 50% in 2023. And so that's like my bigger picture. But what I always need to do is lay out a pre-market game plan and see how the stock reacts to my thesis. And so what we look here at my notes, 103 inflection for the open. Above that, perhaps goes to R1 if it starts to hold above R1, R2, R3. And then if it very quickly goes through those resistance levels in the afternoon is above them, I will look for it to close at or near the high of the day. On the open, if it's below the inflection to start, I will look for it to flush to S1 or S2. S2 happens to be that big psychological 100 level. So anywhere from S2 to S1, I'm happy to be a buyer down there and then look for it to reverse and get it, back above inflection very quickly and start to trend to R1, R2, R3. So we come in, we have our game plan notes, we have our inflection, we have S1, we have R1, we have R2. Market opens, first move is down into S1, but it immediately pops off of S1. As a general rule of thumb, when you have your support levels and you have your resistance levels, if you're looking for a stock to bounce, if you're looking for it to eventually move up to R2 or R3 or higher, the most bullish thing you can see on the open, if it opens below inflection, in this case like it did, and all it does is have a very shallow drop out to S1. If something is going to have a tougher time bouncing, usually it's going to go to S2 or S3 and then turn, and then it's got to work its way all the way back up above S1. If something on the open just goes to S1 and immediately pops back up, and then on the next, in the next 30 minutes starts to hold above R1, and then after that is, trending above R2, that's something where you're looking for a bigger bounce into the afternoon where it's, probably going to close at or near the high. After the market opened, I tweeted this out. This is such a good bounce up in Tesla today, but it needs to actually start holding above 104. And that's because once the market opened, it was bouncing back in between. I gave those levels before the market opened in the morning game plan notes. But once the market opens, I've got to identify where is it being bought, where is it being sold. Well, it held S1 no problem, like straight up, from S1 to 104. But it got sold at 104 once, got sold at 104 a second time. So now I want to see it just take that out. Then I'll start thinking about R1, R2, etc. I tweeted this next thing out where it's completed a bounce from S1 to R2. And pretty much at that point, my thought is short-term bottom is in for the next week or even maybe all the way up to earnings release in a few weeks. And if those earnings numbers are good, obviously a bounce can continue. If the earnings numbers are bad and it's $20 off of the recent low or $30 off the recent low, we'll see how it reacts to those earnings, and guidance going forward. But in the meantime, when a stock gets this oversold, I'm looking for a bigger picture bounce, in the months ahead. Today, we're focused on the short-term bounce, the one day, and what will the follow-through be in the next couple of days. And we're looking at a 30-minute chart right here, and you can kind of see very bullish reaction right off of S1, takes out R1, trends up to R2, and once it got above R2, it pulled back in, very quickly, tested it, and then trended up for the rest of the afternoon. I want to compare in the game plan notes. I said, hey, these large price cuts are bad for Lee, they're bad for NIO, they're bad for XPEV. What happened during the day to these three stocks? The reason, as I mentioned earlier, they're bad because these companies are losing money. And so when your very profitable competitor says, you know what, we need to take more share in this market, we just increased production by 30% in our factory, and we're going to lower price, how do people react to these other companies? Well, Lee gaps down, bottoms in the morning, has a bounce, but you can see the day before it's still down 10, 15%. What does XPEV look like? XPEV is the one that tries to copy the look and feel of the Tesla cars. It tries to clone them the way that Apple has competitors in China that try to clone them. Well, this one had the worst reaction, basically went down on the open, no bounce. And then finally, NIO actually had a pretty good bounce. It's still down about 5 or 6% for the day, but put in the low on the open and really, took out the pre-market resistance in the afternoon, still down about 5% on the day. But you can see there was some differentiation with the Chinese competitors. Maybe Li and NIO will get hurt more by the price cuts in the Model 3 or something like that. Whatever it is, this one you can see maybe they have more expensive cars that aren't going to be impacted as much. Maybe NIO sells $50,000 cars or $60,000 cars where they're competing more against Mercedes or something like that in China. But at the end of the day, the thesis was these price cuts are actually good for Tesla and bad for their competitors, and that's how it played out during the day. And so going forward over the next few days, I will look to see if there's more upside in Tesla because, as they say, the bad news was priced in. This downtrend over the last couple of months really was about the slowdown in China and Tesla needing to eventually, bite the bullet if they wanted to grow their share there. I also wanted to point out something else that came up with a tweet that I sent out yesterday or the day before, which is as Tesla was, this process of it bottoming between, it's in this long downtrend and now started to move sideways in the last week or so between like 105 and 120. It's not, a lot of people have been really, really hurt in Tesla from like, 250 all the way down to almost $100 a share. It's just not going to have those big picture V bottoms the way it did last year where it would drop, 30, 40% and then rally back 20, 30% over the, following week or something like that. This is a very broken, damaged stock in the near and medium term. And so that was another reason why I like this trade today. Like I had levels to trade off of against the last few days. And so we could really judge, if it went to positive and got back above 108, which was R2, that's where it was, there were buyers stepping in yesterday from that 108 level and it went up to 110. So it was a really good level once it got above there to see if it was going to, bounce up to 110, 112, 114, et cetera. And then the final note I want to leave you on, this was a great, fear trade for today where people were like, this is going into the 90s, it can't bounce, oh my God, that this stock is going to bounce 50% to 100% at some point. And whether today, whether 102 was the low today and, that 50% bounce takes it back up to 145, 150, and, it builds an uptrend, it doesn't matter. Like growth stocks that are profitable, that have gotten obliterated, they will bounce at least 50%. And if they have some good news over the next few quarters, 100%. And so I just wanted to take a look at a couple of other stocks in the last 6 months that have got hammered. Netflix was one of them. That stock got just hammered. It eventually, went from 500 to 400 to 300, eventually gapped down to like 220 or 230 or something like that, and sold off all the way to 160 before moving back up 50% to 240. It took a couple of months. And then a few months later, when they had another good earnings report, it eventually filled the gap and it bounced 100%. And then the other one is NVIDIA, which is my second favorite bigger picture, longer term stock after Tesla. NVIDIA just came off from, I think it topped out in the 300s, came off to 200, 150. I thought it was a great buy in the 130s, eventually went to 110 before bouncing back up above 130 and went all the way up to 180. So it had like a 70% bounce in a few months. Now the market did bounce as well from October to November, so that helped it. But, those are the types of bounce. When something bottoms that's a still growing and profitable company, people think it's never going to go up again. It can go up 20, 30% in the next couple of months. And if, Tesla has a good Q1 or it's so-so or not that bad, and then Q2 is good, it's going to move up 50% off its low and possibly, even, 70 to 100% if some really good news flow happens or something like that. So that's the bigger picture. Hopefully you got something out of, why I was looking for a bounce today and understanding that, in the coming months, there's going to be some very good risk reward trades as well.
So you're an active trader, not doing as well as you want, not doing as well as you deserve. and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.